This is CNBC's live blog covering European markets. European stocks closed slightly higher on Thursday as investors continue to seek direction and with U.S. markets closed. The Pan-European Stoxx 600 index closed up 0.3%. Oil and gas stocks pulled ahead with a 1.4% gain despite the continued fall in oil prices after OPEC delayed its policy-setting meeting. Travel stocks led losses, down by 1%. Preliminary Purchasing Managers' Index data from the Eurozone for November showed employment fell for the first time in nearly 3 years. Business activity continued to decline, though the rate of contraction slowed in output and new business. Investors are also watching Dutch election results after an exit poll showed right-wing populist Geert Wilders to be on track for a dramatic victory with his Freedom Party, the PVV. U.S. stocks rose Wednesday after the benchmark 10-year Treasury yield briefly fell to its lowest level in 2 months and the November market rally broadened into the Thanksgiving holiday. The influential oil group Reuniting, the Organization of the Petroleum Exporting Countries and its allies, will hold a virtual meeting to decide crude production strategy on November 30, the OPEC Secretariat said. The group, collectively known as OPEC+, was supposed to convene in person in Vienna over November 25 to 26 but has since postponed its meeting amid inter-member disgruntlement, weighing on intraday prices on Thursday. The Ice Brent contract with January expiry was trading at $80.30 per barrel at 2:10 p.m. London time, down by $1.66 per barrel from the Wednesday settlement. The Nymex WTI contract with January delivery was at $75.45 per barrel, lower by $1.65 per barrel from the previous day's close price. Elliot Hentov, head of macro policy research at State Street Global Advisors, says it's unlikely to ease until the second half of 2024. The British pound gained Thursday after UK business activity defied expectations and returned to growth in November. The Preliminary Purchasing Managers' Index from S&P Global, CIPS, a measurement of services and manufacturing, put activity at 50.1. Ahead of the 50 mark separating growth from contraction, and ahead of the 48.7 forecast in a Reuters poll of economists. Sterling was up 0.5% against the US dollar at 10 a.m. in London at $1.256. It was 0.2% higher against the euro at 1.149. The UK economy found its feet again in November as the service sector arrested a 3-month sequence of decline and manufacturers began to report less severe cutbacks to production schedules, said Tim Moore, economics director at S&P Global Market Intelligence. Relief at the pause in interest rate hikes and a clear slowdown in headline measures of inflation are helping to support business activity, although the latest survey data merely suggests broadly flat UK GDP in the final quarter of 2023. The moves also come after the UK government made a series of fiscal announcements, including cuts to personal and business taxes.